Hi, I'm Alison from FX Scouts. In this video, I want to talk about a trading strategy that is very commonly used by many traders, and I'm going to provide step-by-step guidance on how to go about using this strategy. As we know, the market cycles up and down. So when the price reaches a low, often buyers will come in because the price is cheaper and they will buy the asset at a certain price if they believe it's going to go up. What you'll find is once the price hits a certain level, then sellers will start to sell the asset to take profits. With the first pullback strategy, it's a strategy that capitalizes on pullbacks or retracements in the market so that buyers can get in at a better price or sellers can sell the assets at a slightly higher price. So what is a pullback? Well, a pullback is basically when a price is going in a certain direction, or you've identified that the trend is going in a certain direction, and suddenly there's a small pullback in price where the price reverses and goes in the opposite direction, but for a short period. It's like a small temporary reversal within a bigger movement. Traders often see pullbacks as opportunities to buy in an uptrend or to sell in a downtrend. And the reason they do this, as I mentioned before, is to get a better price and to make more profit. Here's a step-by-step explanation for trading the first pullback strategy. Number one, you want to identify the trend. Now, identifying the trend is probably the most crucial skill that a trader can learn. So how do you identify it? So if you look at my chart, you'll see that the prices are making higher highs or peaks and higher lows or troughs. And this is how you can confirm that the price is moving upwards or is in an uptrend. If you look here, you'll see that the prices are making lower highs and lower lows, which means that there is a downtrend happening. A tool that you can use to confirm the trend is moving averages. Moving averages are used on most traders' charts, and the most commonly used moving averages are the 50 moving average and the 200 moving average. So as you can see here, in an uptrend, price is moving above the moving average, and here in a downtrend, price is consistently moving below the moving average. Then another way to use moving averages to identify the trend is to look at crossovers. As you can see, when a shorter term moving average like the 50-day moving average crosses above the longer term moving average or the 200-day moving average, this indicates an uptrend. And if the shorter term moving average crosses below the longer term moving average, then this indicates a downtrend. Then you can also draw trend lines. So as you can see here, you'll connect the highs in a downtrend or the lows in an uptrend using a straight line. And the more points you connect and the longer the line holds, the stronger the trend. And lastly, you can use technical indicators. So the MACD, or moving average convergence divergence, is a very popular indicator. And if you look here, you'll see it is quite similar to the crossover of two moving averages, because one is a slower moving average and one is a faster moving average. And as they cross over, they'll indicate the trend strength and direction. Then you get the ADX, or the average directional index. And as you can see here, values above 25 indicate a strong trend. After you have identified the trend, you are then going to wait for the pullback. The pullback, as I mentioned earlier, is basically a counter trend move in the opposite direction. In an uptrend, as you can see here, the pullback will move slightly lower, though it won't make a lower low than previous lows. And in a downtrend, it'll make a move higher, or it'll rally slightly higher, but it will not move higher than the previous high. Next, you'll identify pullback support or resistance levels. You'll identify support levels where the pullback might pause or reverse, and tools for doing this include Fibonacci retracement levels, as you can see over here. You can see price often pulled back to that level, so the Fibonacci is a very popular tool for identifying pullbacks and how far the retracement might occur. You can also use previous resistance turn support, as you can see here. That's also a very popular level where price retraced and then continued in the same direction as the larger trend. Next, you'll look at your entry signals. So firstly, you can look at candlestick patterns. Candlestick patterns that traders often use are bull flags, or they look at candlestick formations like a doji candle, where there's some indecision in the market and the market then continues in the same direction. Then you can look at volume. And what you'll find is decreasing volume often occurs during the pullback, with increasing volume as the trend resumes. Next, you want to find your entry point. The entry point will be the price action where it confirms that the trend will resume. You want to enter your trade when the price action or indicator confirms that this trend is going to continue. For an uptrend, this might be a bullish candlestick pattern off a support level, or for a downtrend, a bearish pattern off a resistance level. And then of course you want to manage your risk, and you want to set stop losses and take profits at logical places on the chart. So you could place your stop loss just below the recent swing low in an uptrend, or above the swing high in a downtrend. And you can set tighter stops if it's a very strong trend. But this will definitely help you to manage your risk if the trend does not continue as expected. We've spoken about setting take profits and stop losses many times in recent videos, so you can go check those out. Setting smarter stops or the risk reward ratio are two great videos that you can look at for setting stops. But generally you want a risk reward ratio of at least 1 to 2 or 1 to 3. And lastly, you want to manage your trade. This means monitoring your position and exiting or scaling out of the trade if it looks like the trade is going in the opposite direction. Thanks so much for watching. If you have any questions regarding the first pullback strategy or any other trading strategy, please get hold of us. Our website is fxscouts.com. And please remember to subscribe and like.